Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks for everyone tuning in.
Ted, we know over the summer, typically stock markets, whether they're doing bad or poorly, few people participate, so we don't really have a full volume look at what intentions are. Does your investment strategy differ from the summer going into the fall season?
Well, we're not really seasonal players. There are some funds and investors who do that, and some of them have been quite successful. But we tend to follow our disciplines, looking at what insiders do, and that can vary depending on different circumstances in the market. So, what we've noticed, really, one of the big developments, I think, over if you're talking, sort of the shift between summer and fall this year is probably the changing risk-reward dynamic between crypto and gold. And we've had a really good run in the crypto space. I know we had a sell-off in the spring, bounced back, I think, stronger than a lot of people expected. And when we talked about it in the spring, I believe I suggested that some altcoins, those are coins other than Bitcoin, could go on it to make new 52-week highs or all-time highs. That's what's happened with coins like Solana have done that, and Terra Luna have done that. And these are not recommendations. I'm just kind of rambling off a few that I know have made some new highs, but Bitcoin has not. And at the time, I believe I suggested it would be 50-50 whether Bitcoin can make a new high for a whole host of reasons. I don't think we've ruled that out. I think it can still make a new high, but it's not a slam dunk. And the overall risk reward, I think, risk reward outlook for cryptos is turned a bit towards a risky side now, not only because they've had a good run, but as we mentioned in our Insights newsletter, which we published over the weekend, it's free on Canadian Insider, and it's titled A Nuclear Reaction. Regulators are coming after crypto again. They tried to kill it off. I think in the spring they failed. There was a coordinated global attack against crypto. I believe in the fall, in the spring, it failed. They're going to try again. So this is going to probably provide some headwinds for the crypto market, and we've seen a little bit of shakiness today in it, and along with the broad market as well. But I think that the risk. The risk situation for crypto has gone up a notch. We have to brace ourselves for another attack. Jim, this reminds me, I wasn't back there, I wasn't around back then almost, but, what happened in the Great Depression, where the authorities were really concerned about gold. And, I'm sure your listeners know that, FDR confiscated gold. Well, now I think they'd like to get their hands on people's crypto if they could. Some regulators, not all, like you've got, El Salvador, making Bitcoin legal tender. So, no, we see this mostly in the developed world where you have a certain group of regulators, a certain group of policymakers are desperate to keep the current financial system in place. Cryptocurrencies are a threat to that. I mean, they're a threat to the central banks being able to set to control things the way they think they can control things. They're a threat to a lot of existing institutions who have made, basically empires, bureaucratic empires on regulating things and protecting the consumer and all in the name of good stuff, which of course, is I'm sure what a lot of these bureaucrats started out as, but now, as we know, we've got this huge industry called government, and we saw that when it came to things like the financial crisis, they were not prepared to protect anyone from the financial crisis, and if anybody they protected, it was some of the wrongdoers, where none of them ended up having to go to jail. So, we may hear a lot of propaganda in the next few weeks from certain bureaucrats, certain senior policymakers talking about the evils of cryptocurrency. Well, this is all propaganda, but it could impact, the prices of some of these cryptocurrencies. I think Bitcoin is the least susceptible to that kind of risk because, to be quite frank, it was designed to be regulator-proof in the sense that you can't shut it down. You can tell people that you can pass a law saying you can't hold it, but they're not going to be able to shut Bitcoin down. That being said, this is probably going to be a rough environment on the regulatory front for cryptocurrencies. Gold, on the other hand, it's paid its dues over the past year. It's kind of been in this consolidation mode. It's not on the radar screens of regulators right now. It's sort of able to sort of, I think, fill a bit of an insurance vacuum that cryptocurrencies, which may have been doing for some investors over the past year. There may be an alternative. They may see an alternative in gold and silver as a way to kind of sidestep some of these aggressive regulatory actions, which I expect will be coming down the pipe soon. So we'll see. I hope I'm wrong. I hope that in the U.S. in particular, that the regulators decide they want to help build the industry in a fair manner as opposed to crush it. But we will have to see. We will see when they play their cards in the coming weeks. But it could be a shaky one for crypto. But on the other hand, for gold and silver, it may be a time for them to kind of hang in there and kind of offer a kind of a rock solid alternative to cryptos for people who are looking for insurance. So we'll see how that plays out. Our indicators are very positive for the gold mining complex right now. So that's positive. They're much higher than they were a year ago. We were not all that excited about gold and gold miners a year ago, but we're a lot more constructive on them right now based off of what we're seeing in our insider indicators.
What are some of the indicators that have made you positive?
Well, we're seeing a lot more buying than selling. Our Inc. Gold indicator is over 400%, and that's compared to a year ago where it was about 100%. So there was about 4 times as many stocks with key insider buying in the gold group over the past month or two than selling. So that's really encouraging. And a year ago it was lower than that. So even though it was still elevated a year ago, what you really have to look at is sort of trends in insider sentiment, and we've seen some peak insider buying in the gold area, and that's what you want to see. It's not a fail-safe indicator. I mean, it's not 100%, but certainly if you're going to be bullish, you want to look and see what the insiders are doing, and if they've put in a bullish formation in terms of sentiment, which is what we're seeing, which is peak insider buying, which often happens around share price bottoms, then that's a nice confidence builder that gold stocks may be basing here, and they have been basing now for the past few months. And all I think it would take is a little bit more of a shakeup in the geopolitical environment and the Washington environment to help put a bit of a tailwind behind gold and silver, help them try and break out of this range that they've been in now for months. But we will have to see They have a headwind, which is the U.S. dollar, which has been strengthening. But, we're going to have to see how this plays out. There's a debt ceiling debate coming up. There's the Biden administration's trying to pass massive spending bills, and and it could get a bit ugly in the fall here on Capitol Hill, because not everyone in the Democratic Party is on board with this massive $3.5 trillion spending plan. So how will that impact the U.S. dollar? We don't know. So let's see here. But looking at how gold stocks have been basing, based on our signals, the chances are we would see a breakout before we would see a breakdown.
Ted, El Salvador, the first nation to say that a cryptocurrency, Bitcoin, is now part of their official currency regimen because they also accept American dollars there. Why would a country want to accept something that can go up and down in value 20, 30% in one day?
Jim, it's all about payments, and it's all about the embedded cost of the existing financial system, which is what Bitcoin and other cryptocurrencies have been designed to disrupt. So you think about somebody who wants to send some money home to El Salvador, whether it's a worker in whatever country, United States, wherever that worker may be. If they're supporting a family back home in El Salvador, they can spend an arm and a leg through money transfer fees and all sorts of middlemen, wholesalers, and you have to pay them all to send money home. Or you can send it via Bitcoin, basically for free. There's probably a very small, minuscule charge, and that's what it's all about. It's not about going to buy a cup of coffee with Bitcoin in El Salvador. It's about getting money into the country at a very, very low cost, and you're cutting out all the big money center players who have been profiting from this very nice arrangement, that has been built up over the decades. And that's what Bitcoin and cryptocurrencies can disrupt. And that's why people like John Paulson, who come out and say ridiculous things like cryptocurrencies have no value, they're not putting themselves in the shoes of poor people who just want to send some money home and not have to pay, big financial entities, the premium to do it.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's going on with uranium?
Well, the title of our newsletter was A Nuclear Reaction, and what I was referring to was the breakout of uranium stocks on Friday with the uranium ETF, the Global X Uranium ETF made a new 52-week high, and a number of stocks obviously made 52-week highs. And I think a lot of this is thanks to a big kind of restructuring we've seen in the ETF space, but with the ETF or exchange traded space, where we saw Eric Sprott's organization basically restructure the uranium participation unit vehicle, which held physical uranium, into the Sprott, I believe it's called the Sprott Physical Uranium Trust. And the whole business case behind this trust is that, and I'm not recommending it, I'm just kind of describing kind of what I think is going on here, is that there is a business case to be made to acquire physical uranium because it's so underloved, and looking down the pipe over, the next decade, that first of all, it's not guaranteed that there's going to be this surplus of supply that utilities have been able to enjoy, for the last little while, last 10 years or so. There could actually be a deficit, that remains to be seen. But there's also part of the business case, I believe, is that if policymakers are really serious about fighting climate change, we've been hearing about this climate emergency, right? Climate emergency, Paris Agreement. Well, who's meeting in the developed world? Who are meeting their targets? I'm not sure any developed country is meeting its targets. Well, at some point, policymakers got to get serious and say, yes, windmills are great, solar power is great, but how are we going to power all these electric vehicles? In British Columbia, we're blessed. We have hydroelectric power. Quebec, they're blessed. They have hydroelectric power. A lot of places have been relying on coal. How are we going to power all those Teslas and Model Es of the different automakers? Are you going to use coal? What are you going? And so eventually, policymakers are going to have to level with people and say we either have to build nuclear plants to meet our targets, I think, or we're just going to this global warming thing, it really isn't that important. We were just kind of joking, right? So at some point the rubber's going to hit the road here. And now nuclear power plants, you don't build them in 6 months, but, once the momentum shifts towards building more power plants, if it does, and I still think the jury is out on that, well, then there's going to be a scramble for uranium's inventory. And so I think, one of the assumptions here for people investing in actual uranium is that those factors will play out. We will have to see. But it's certainly right now given the uranium group a big boost. We've been in a bull market in uranium, and I have to admit, this is not something that we picked up on until really we were talking to one of our people in our Inc. chat forum saying, this is really happening, and we looked at it, and we looked at our indicators, and surprisingly, we looked at our indicators and go, yes, there was peak insider buying in the uranium group late last fall, and it's actually something we missed, to be honest with you, because there was so much else going on in the markets at that time with the Pfizer vaccine coming out and so many of the economy sensitive stocks roaring. We sort of missed the big jump in uranium insider buying way back last November, and that was signaling the bottom. And it really the stocks have not looked back since. Now we saw another small peak in insider buying over the summer when uranium stocks were toying around with their summer lows. You asked about summer trading earlier. Well, uranium stocks were kind of languishing in the summer, and we saw some nice peak insider buying last month. So we've seen a big jump here. I think we've seen a restructuring on the investment side in that now we've got some players who are serious about acquiring uranium at what they believe are cheap prices. Now we've got the investment side of the equation. Seems like it's in gear. We still need the other shoe to fall. That's the utility side, I believe. I'm not an expert by any stretch in the uranium industry. I don't want to come across or present myself as really having done a lot of homework here in the uranium industry. I have not. I'm just looking at our indicators and seeing that they are confirming the move here. Now we could get a pullback after this run up, in the last week or two for sure. But look, we've got an environment monetarily that supports speculation in the sense that interest rates are going to be at near zero for who knows how long. That's usually good for commodities. Now, for uranium, it's a bit longer life assets and uranium and the uranium industry. But if policymakers start to come in and say, yes, we need these reactors, and there is already talk about these smaller modular reactors, but we'll have to see how that plays out. We'll have to see if how the momentum among policymakers develops with respect to nuclear power. Otherwise, how are they going to meet their targets, Jim, on reducing emissions? We'll see how far, the electric vehicle can only get us so far, and again, these electric vehicles, you have to charge them, and where is the source for your charging going to come from? Where is that electricity going to come from? So, policymakers really have to level with people. How are they going to get there? It's all right to talk about it on the campaign trail. Oh yes, we're going to reduce emissions. Well, how? Let's get serious here. And it's not all big oil. I keep hearing, we have to, big oil's got to pay the price. Well, big oil is basically a few companies, and if you think taxing or shutting down Chevron or whoever, or Esso or whoever, pick whatever company you want. If you think shutting them down is going to reduce emissions, I'm sorry, someone else is going to fill the void. So there's got to be an alternative to fossil fuels, and it's a pretty short list on how you would replace fossil fuels and especially in large power generating situations. So yeah, let's see what policymakers have to say about nuclear power over the next year. And if you start hearing noises coming out of Europe and some real concrete money being allocated in the United States to nuclear power, we could really be off to the races.
Ted, is there anything that you would advise investors to do right now?
Well, we don't provide financial advice, of course, so, we just provide opinions and what our signals are saying. But, I think that, what we're looking at going forward is, of course, is letting the insiders guide us towards opportunity. And right now, we're taking a barbell approach because I think the policy outlook is so uncertain. And what I mean by that is that we don't really know what's going to happen in the United States with monetary policy or fiscal policy. We have a roadmap. Yes, they want to spend a lot of money. We'll see how that turns out. We have the Delta variant, which is playing havoc with supply chains, which is impacting inflation. And we don't know how that's going to turn out. So there's a lot of unknowns, and how that's all going to mix into outcomes. To be honest with you, we don't know. So what we do think we can do in this situation is have exposure to both those types of investments that would do well under a deflationary, low growth environment, which is our D economy stocks, and also inflation sensitive stocks, which we call G economy stocks. So basically, we're taking a barbell approach, a sort of 50-50-ish approach, looking at healthcare for the D economy type stocks, looking at energy stocks, for the inflation, and looking at battery metals, for the inflation, the G economy stocks. And of course, you need your hedges, in case something goes wrong. And that brings us back to, where I think gold will have an emerging insurance role over the next few months, as it's kind of seen as being a stable insurance towards what could transpire as some surprising risks on the geopolitical front. Never mind the Delta variant and all these problems in Washington, or challenges in Washington. What about Washington and China? We don't know. Everyone assumes that there's no problem there, that everything's la-di-da. That yes, there's some headline risk, but things could escalate very quickly in the shipping area. If China makes some aggressive moves on the shipping area, how will that play out? Well, that doesn't sound very deflationary to me. It sounds both inflationary, and it sounds like it could shock financial markets. If you've got more supply chain disruptions, this time not with the Delta variant, but due to geopolitical risk. So, I'm not predicting that, but it is a risk, and that's why I think gold and silver, we'll get a second look here. And in the meantime, though, I think we're at zero interest rates. There's going to be opportunity, and you look at those D economy and G economy stocks to benefit from the overall monetary tide, which is still to lift a lot of boats. While all this uncertainty is hanging over us. So take advantage of the low interest rates by seizing those opportunities, but have some insurance just in case.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, we'll ask that question for you if you send it to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.